Hello, I'm Dick.
And I'm Eric, and we're the Annuity Guys.
Eric, you remember back in 2008 when we called the Great Recession?
If only we had been right there with the crystal ball saying, you know what, the market's going to correct.
Well, the amazing thing is even though we didn't call the Great Recession, we did tell our clients, and in particular, I can remember, explaining to folks how, annuities can help them, going through this time, and especially going into retirement. And for those folks that did actually make that decision in 2008, 2007, 2008, it was a very good situation. So for 2016, for the crash.
Which right now is the time, as you watch it, since the beginning of the year, we're down, up over 1,700 as today. We're at 16.5 and falling is what it seems like. Is the crash here? Is the crash coming? Is it going to correct and go back the other way?
Yes.
The guarantee is yes, it will.
It's going to go both ways, folks. And the question that we're getting to is, we're 8 years into a rally.
The bear comes out of the cave once every 7 years, is what they say.
So we know, Eric, that, folks are set up for another correction. We don't know if it's going to be a Japan-style correction because of all of the global forces that could put us in a situation where it doesn't come out of it for 5 years, 10 years. Japan's been in it for 20 years. Right. Trying to climb out, and they haven't climbed out yet. So, and I mean, Japan's not a third world country. At the time it was one, like the second or third largest economy. Yeah. So could it happen to the United States? Of course it could.
Sure.
And so, I think that whether it's 2017 or 2016, folks need to understand what annuities can do for some portion of their portfolio. In terms of protecting it and helping them avoid this.
Well, and it's probably best let's take a step back to 2007 and the clients we had that went into an index-style annuity in 2007 that thought we were heroes in 2008.
Exactly.
And why? Because those clients got a zero on their account statements. Why could we be heroes to people with a zero? Because
they didn't lose money.
And
exactly.
And that's one of the things that I think is so tough to take those. I'm used to accumulation. I'm used to growth. I want to grow. I want to grow.
Right.
But nobody wants to lose money, and that's what the indexed annuity, had the ability to do for those people. Take their winnings off the table, lock them in. They'll be happy not to lose 30%.
Well, and what happens when you're using an indexed annuity, Eric, and the market drops like that in 2008? That year, you're right. They didn't have any earnings, but they didn't lose a dime.
Right.
So consequently, now they're set up at a very low point for 8 years of good, steady growth as the market improves.
So we probably need to explain how that works. It's something called, with an indexed annuity here, you're talking about something called an annual reset. So yes, you may have 1 year of down, but guess what? Then you get to start like it's a whole new year. It's
at the low point. You start at the low point.
So wherever you are at anniversary, a year later, perhaps, you're locking in that number at that stage, and then you get the growth from that point.
Right.
So
unlike the stock market, where you're actually truly invested in the market, you drop by 30, 40, 50%. And then you have to earn that back over whatever length of time before you actually get to say, I'm back in the black, I'm in the positive.
And why this means such a big deal to me specifically is when I'm working with clients, especially for retirees, you're talking about sequence of returns. It's one thing for you to take your money out and make a withdrawal out of your money. It's another thing when you take your money out and the market takes your money out, because you're still having to take those dollars out to live on.
Right.
And that's what we're trying to say is there are aspects of annuities out there that can protect both the principal side and protect your income stream to basically make sure you're successful.
And I do think that so often folks that I'm working with will look at the annuity and think, well, if I pull out of the market, it's kind of like I'm just giving up all of that growth. Yeah. And there is a potential that there could be, exponential growth from the market. But what folks don't realize is that when they put their money into the right type of annuity, they can still get a good, steady growth that's a result of the market. but not a risk from the market. It's not invested in the market. So maybe you'll get that good steady 3 to 6%,
Sure.
but you know you're never going backwards.
Yeah, I think we talk about it as beating the bank. You're probably you're gonna get better than what you would typically down at the
Right.
corner financial institution. But
Yes.
you're not trying to match that entire upside potential of the market,
Right.
because you're not going to match the entire downside of the market. And
Exactly.
you're giving up both kind of the tops and the
Right,
bottoms
right.
of that.
And when the market, Eric, is really heated up, kind of that exponential growth, you're going to get more from an indexed annuity than you would otherwise.
Right.
So if we happen to be in a good bull run market, you're still going to get to participate in some of that growth in your portfolio.
Yeah, and that's what you want to get, at least a piece of that upside, because we all know inflation is out there. No matter what the government says on your Social Security checks this year, there is some aspect of inflation. Food costs more. You need something
Yes.
out there that's going to get some growth. And ideally, you pick up 3, 4, 5%. At least you're keeping pace with inflation and the cost of things out there.
Right. And Eric, I know that the 2016 crash isn't imminent, but
I'm not making that prediction.
But a crash is imminent,
Yes.
and whether it's 2016 or 2017, could have been in 2015.
Right.
So thank goodness for a lot of folks, they've still got
Right.
time to make these hard decisions. They are hard decisions, but annuities can really put you in a great position if you make that decision.
That's exactly it. You have to make the choice. You have to make the first step. And I would say it's not probably time to wait too much longer.
No,